Hey everybody, what's going on? It is James here with Crypto Common Sense, aka 3 Peaks Trading, and it is November the 12th. I wanted to sit down and shoot a video talking more about the markets, also just talking about some bigger picture stuff because that's really what excites me the most. So the last video I did, I was obviously under the influence of pain medication, but it turned out fine. I think the video, I rewatched it. I think it's fine. One of the things I talked about in that video was the fact that most people just simply lack focus. But it was funny because today on Facebook, this memory popped up from 8 years ago. And this is an important thing, and it ties back into that last video I shot. This post said a lesson I learned from after years of dealing with students from around the world. Most people lack what it takes to be successful online. They lack focus, they lack willpower, they lack resourcefulness, they lack money, they lack time, they lack connections, etc. The ones who succeed, however, only seem to lack one thing: excuses. And that is equally true no matter what you're talking about. There is a reason that there are people who make it to the professional sports level who have no genetic gifts that got them there. There are just people who shouldn't be where they're at, but somehow they put in the effort and put in the work and got there. Like when I think about the NBA, I can't think of the guy's name now, but he was a big player back in the day. Muggsy Bogues, I think, something like that. Anyway, the guy was like 5'3". So on paper, this guy has no business being in the NBA, yet through hard work and effort, he became an NBA player. Or you look at other, there's all kinds of examples of this in the world where people shouldn't be where they're at, but they just put in the work. I think that's really what it comes down to is people, especially smart people, and in trading, let's be honest, trading attracts smart people. Like most people watching this, you are probably smart. You probably know you're smart. You probably realize that you are more intelligent than the average bear. And I say that absolutely no sarcasm. And the problem with that is smart people, we have a really bad habit of being arrogant. And arrogant in the sense that everything came so easy to us in life that we never really learned how to work for stuff. And so life, in my case, life smacked me around when I was young and showed me very quickly that nobody cares that I was book smart. Life didn't give a shit that I was book smart. It only cared about how much hustle I was willing to put in, how much grit that I had. I don't want to turn this into a woo-woo motivational channel or anything, and I know I'm several minutes into the video, but really understand this. Being smart doesn't mean anything. In fact, in most cases, I find it is a deterrent. It's the dumb people in the world, the people who had to learn and struggle for every inch that they got growing up. They learned how to study. They learned how to learn. They learned how to apply things, whereas smart people often went through school without ever having to take a book home because it all came naturally. And then you get out into the real world and find out that no one cares about how talented or smart you are. They only care about how hard you're willing to work, how much effort you're willing to put in. And when I say how hard you're willing to work, I don't mean 100-hour weeks. I mean, how much effort are you actually putting in? If it's 2 hours a day, cool. But is it 2 hours of real focused effort? Or is it 2 hours of, well, I was on the computer for 2 hours, but an hour and 55 minutes I was playing on social media? Obviously, Bitcoin is doing exactly what I laid out in my last video, which is it had retested this resistance level. I don't know where price was when I shot the video. It may have already started to dump by then. I don't know. But this was a support level that got broke through it, turning to resistance, and it has since moved down from there. But again, all this right now is still consolidation. Okay. Now, I want to be very clear about that. This is potentially, and we don't know yet, but this is potentially redistribution, and you do get a range. If you guys remember about a week ago or so, I shot a video and I showed the squiggly lines. That's what's going on. It's ranging right now, and we'll have to wait and see what happens. If we get a clear close below these levels down here, it's a sign that this could be wanting to continue. But on the flip side, always keep in mind that if it goes below this level and then closes back above it, it could act as a liquidity trap that traps bears before a push back up. Okay. So you want to watch for those closes. And listen, closes are a funny thing. And I know that some people in the TA community will not like me saying this, but closes, they get too much emphasis. Like I often see this. I saw somebody one time that said like professionals trade closes. Closes are a made up thing, guys. Like you have to realize this. It's such an abstract made up concept. Okay. So on a daily candle, a close is a close, but that close is not the same. Like the weekly candle is still open. The monthly candle is still open. Or if you're trading a 5-minute chart, a 5-minute candle close means nothing on a daily chart. or a 30-minute candlestick means nothing on a daily chart. So closes are kind of a weird deal because they don't really mean as much as people say they do. But at the same time, the larger the time frame, the more important the close becomes. And so on a daily chart, if you do get a close below this level, that is a bearish sign. If you get a push below that level that then, zaps back up, kind of like you saw right here, so you get that pump up, that's because people got trapped and they pushed it up, and those people had to close their short positions, and people who had sold decided to get back in, and et cetera, et cetera. Right. And a lot of times the market makers, the bigger players, will do that to create liquidity because they want to short it. So they got to get you, willing to buy so that they can sell. So same thing down here. This is probably them creating liquidity where they were trying to enter short positions, and that's what they did. And the last video, what I said was on this pump, if you're in a short-term long, it's good. Or if potentially if you wanted to short it, it's good. And what I meant by that was, it gave you a better entry for a short position. Right now, Bitcoin is in a wait and see area of the chart because it's very potentially, in this area here, again, the beginning of phase E. But we really need to start seeing some closes below this level to kind of help confirm that. And if it starts closing above this level, then that would, of course, mean that this is a potential double bottom. And if it's double bottom on the bottom of this range, then it, again, we could see a move back toward the top of the range up around 125. To be clear, right now, I still lean toward the theory that this is actually phase E. If we take a look at the QQQ, man, this thing has been tough, right? Again, haven't been trading the last few weeks, so I haven't gotten caught up in this. haven't made any money on it. haven't lost any money on it. But when I look at this is exactly what I was saying the other day. It pumped up, which was weird, right? Because this is a abandoned baby type of pattern, which is supposed to be bullish. But then we needed some kind of continuation to kind of confirm that, and we didn't get it. We got this inside candle yesterday on Tuesday, like inside, which is also weird. I don't know why the markets were even open on Veterans Day. For those of you that served, thank you for your service. They were open, and so we got this inside candle, and then today it gapped up, but then immediately dumped. So I don't know what's going on with the QQQ, right? It is being very, very strange. And I think it's also just in a wait and see. I think it's a very, very sketchy place to get involved in this thing. One thing to keep in mind, while the QQQ has kind of been sketchy, and while Bitcoin has looked like it's kind of had this little bit of a mini pump toward the US dollar, in reality, our relative strength chart showing Bitcoin versus the QQQ, it's just been bleeding. Bleed. Still moving down. And essentially right now it's testing or trying to test, the bottom side of this range again. If this range fails, then again, I think that's a sign that the cycle is over and that we're entering into a bear market phase on Bitcoin. This is, of course, that Bitcoin versus the Mag 7 chart. Again, just looking like distribution. It's a monthly chart, so it's going to be slow developing. It's not really something that I need to talk about every single day, but that's what that chart looks like. So this is actually a chart of the Magnificent 7 average. So the way this works is I just put all the symbols in there, add them up, and then divide by 7 to get an average. And right now, this just looks like a range. That's all this looks like. We had essentially had the bottom of the range in this ballpark here, right? It offered resistance back in this area. And then, of course, it's support to this area. We had this weird outlier, but I really considered this the range. This was kind of an outlier, pumped up and then immediately gaps back down. So it's like a trap for bulls. But there's nothing in this chart that says the trend has turned. Okay. It could be transitioning, but right now this is just a range. And so a range is essentially a coin flip bet. Okay. That's really what a range is. It's just a coin flip. It's a 50-50 of which way it may go. Doesn't mean you can't trade it. If you're using the right type of reward to risk, ranges can be very, very profitable, but you have to understand that your edge will not lie so much in picking the direction as much as using the math to your favor, which, by the way, a lot of people seem to really misunderstand. I had a student years ago that was like successful in sports betting. And of course, when he came to trading, he was able to apply a lot of the same principles. And the reason is simple. And it's the same thing that, I brought a lot of my poker knowledge over into the trading world when I began trading. You don't have to actually have an edge on the direction the market is going if you have an edge in the math. Now, for those of you that aren't quite sure what I'm talking about, think about this. If I know that there's a 50-50 chance that this is either going to break up or break down, And my thought process in this hypothetical example would be, if it breaks up, it's going to continue a bull market and have a big pump. And my thought process is, if it breaks down, it's a bear market and going to dump hard. Well, then what that tells me is I can set up a trade where I'm going for a large win, in which case, maybe if I was longing it, just hypothetically, maybe I would long it, put a stop down at the bottom of this tail, and then put this up for like a 5-to-1. Just again, just hypothetical, just using real easy numbers for simplicity's sake, right? Let's say like up like that. All right, so maybe I take a trade like that, and I know, hey, I've only got a 50% chance of winning this trade. It doesn't matter, because I have a 5-to-1 reward to risk ratio. So in other words, I've only got to win this trade about 20% of the time to make a lot of money. That's just the reality of it. And somebody else could take literally the opposite position and say the same thing, like, hey, I think this is probably entering a bear market, and I don't think it's going to take out this range high at all. I don't even think it's going to go back here. I don't think it's going to even go here, right? Something like this. And this person, if they took this trade, the reasoning would be, and I'm not saying this is what's happening, I'm saying this is the reasoning behind it. Their reasoning would be that this is actually the last, dead cat bounce before it breaks down, so that it wouldn't go that high. All right. So they did that, and they're saying, hey, this is going to be a bear market that, breaks down. They might have a trade that looks something like this for 5-to-1. And again, same exact thing. It doesn't matter that they have basically a coin flip chance of being right, or even maybe a 40% chance of being right. Because if they're trading a 5-to-1 and making $5 when they're right and losing $1 when they're wrong, they can be wrong 4 times, right once, and still be hugely successful. And a lot of people don't get that. A lot of people really focus on this need to be right. I'll wrap the video up there. Do me a favor, give the video a thumbs up, subscribe to the channel, and of course, leave me a comment letting me know what you think. As always, please remember, I'm some guy sitting in a spare bedroom, and that means that nothing in this video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset.